Hey guys, welcome back. Have you bought stocks before and you paid too much? Or you sold them at the wrong time and the market recovered and then you felt a little bit silly? Well, don't worry about it. I mean, it's happened to all of us. But the question is, what are you going to do about it? How are you going to improve it? Well, in this video, I'm going to show you the basics of RSI and MACD, which are two indicators that I use and that really help time the market. So you get to know a little bit better when's a good time to buy and when's a good time to sell. So in this video, the goal isn't to make you an expert or anything, but just by understanding the basics, it's really going to help you avoid the bigger mistakes, the ones that are really costly. So park the kids in front of the TV, tell your spouse you need 15 minutes because we're starting right now. So how do you add RSI and MACD to your indicators so that you can actually use them when you look at a stock? Well, all of your brokerages, except maybe Robinhood, are going to have access to it. So go in your charts and you'll be looking for, often they call it studies or just indicators. I like to use Yahoo. It's very simple to use, good interface. So I'll show you how you would do it with Yahoo. So just go into Yahoo, any stock, then you'll want to go to chart. You'll want to click here, indicator, and then you'll be able to look for RSI. RSI, you can change the settings. The typical settings they have is 80-20. You don't need to know what it means yet, but I'll explain it to you. But I like to do 70-30, right? And then you'll go for MACD, and then MACD, leave it the way it is. So there you go. Now you can see the information on the chart. So let's start with RSI, which stands for Relative Strength Index. You guys are going to love this. So when there's a movement in the market, we all think about what direction the movement is, right? Is a stock going up, down, or sideways? But another variable that's extremely important, even almost more important than the movement, is what strength is that movement? Because that's going to help us determine if the stock is overbought or oversold. So that's what RSI helps us with. It's on a scale of 0 to 100, and we changed the settings to where anything above 70 is considered overbought, and anything under 30 is considered oversold. So what's the logic behind the RSI indicator? Well, you have to remember that these are lagging indicators. That means that they're reacting to the price movement that happened before. So they're not exactly predicting the future. You still have to use your common sense, and that's why we use more than one indicator. But let's look at this chart for DraftKings. In this case, I'm using the hourly chart on a 1 month range. Right? And if you notice over here, we have a period where it was considered oversold. And what happened? Well, there's a rubber band effect that make it so if you look at the price started going back up. Now, you have to remember, these indicators don't tell you how much or for how long that the movement's going to happen. It just tells you that they're noticing a pattern that's changing, right? So it can go back up like this for a long time and it can skyrocket, but it also can be very, very mild. So in this case, as you can see, it went from oversold, then it went back up a couple bucks. But over here, when it was overbought, yes, it stopped going up, right? But it didn't go down. It stayed flat, and then eventually it got another little period where it was up, right? And then slowly it started going down after that. So you have to understand that it's not precise, it's not a 100% guaranteed thing, and it doesn't predict the future. It just helps you notice trends, and then you have to analyze, well, what's the graph looking like? What does that indicate? So another cool thing you can do about it is you can change the periods and the range to suit what you're looking for. So in this case, I changed it to 2-minute interval in a 1-day range, meaning this is like day trading mode, right? So today we can see that DraftKings was oversold a couple times in little periods. Well, see right here, if you had bought here, you could have caught a little uptrend. But look at how minor it is, right? $32 to like 32, 33, right? You're talking about $1 range. So that's why I'm saying, depending on the date range and the interval you're using, you're going to see micro movement or you're going to see macro movements. So it really depends on your goal. If you're looking for the trend of a stock over time, you'll probably want a longer period. If you're looking in one day, you want to try to get the best price on that day, then you'll want to get a much shorter interval and you want to look for these periods of weakness during the day. So that's one way that you use RSI, is you'll be looking for when it's oversold during either the day or a longer period. So if you're observant, you'll notice these periods over here where it was oversold, and you'll say, well, Patrick, like the price didn't really go up, so why isn't it working? Well, you have to remember that's why one indicator isn't enough. They don't predict the future and they don't tell you the entire story. If we look over here, yeah, it's true. Like in this little period, it was oversold. But if we look at the longer graph and the longer period, the stock has been on a downtrend, right? So it's not going to break that downtrend just because for 2 minutes during the day it was oversold. I hope you understand this fact. Like you have to look at the whole picture and then you drill down to what's happening like micro, right? It all blends in together. So that's where RSI. I hope you understand the basics. Now we'll move on to MACD. All right, and now for MACD, one of the best indicators with RSI. It stands for Moving Average Convergence Divergence. What does it do? Well, RSI tells you the strength of the movement. MACD kind of helps you predict what the direction of the movement is and when there's a momentum shift. So let's look at this one, for example. This again is for DraftKings. So in this period, we can see that the price of the stock was going up, right? Well, when the purple line is above the orange line, it usually means that the stock is going up. Notice the cross over here. This is called a cross, right? Well, remember, it's delayed, right? It's a lagging indicator. So the change of the price really happened over here, but there was a slight delay in recording it with MACD. But look at the cross. Now the purple line is under the orange line. And what do we notice? The stock price starts going down. Notice over here it crosses again, and now the purple line is above. What happens? The stock's going up slightly, right? And then over here it crosses again, and we can see that it's starting to go down. So this is how you want to use MACD. It's to notice like those crosses, which remember, there's a little delay, so you have to time it properly. That's why the more indicators you use, like especially when you use two together, you'll get a clearer picture. Because if you were only looking at this one, you'd be late, right? If you were looking only at this one, you'd be late. It started over here and now you're here. But when you combine it with RSI, you get a confirmation, right? One of them tells you, hey, something's happening. And then if the other confirms it, then that's much stronger than if you use only one of those two. So same thing, this is for 1 month. If we look at, let's say, a 1-day chart, let's put it at 2 minutes, you'll notice the same things. A crossover here, it goes up a little bit. Crossover here, it goes down. It's going to keep doing that same thing over and over. Crosses here, it goes up. Crosses here, it goes down. Now, again, it doesn't tell you exactly what the strength of the movement is going to be, right? Because like this drop is a lot steeper than this one over here. So it doesn't tell you exactly what's going to happen with the stock, but it tells you that there's a momentum shift. And then how you adapt it, it's a little bit more advanced, but let's say that this was happening. Well, you know it's going down, right? So if you were a short seller, you could set your stop loss over here, take advantage of this drop, and you know that you'll probably be okay. You're not going to lose money because it's going down, right? So that's how you would use it. And then the longer period you go, the more the trends are going to be meaningful. This is for DraftKings again. Remember, after it peaked in the 40s, it started going down significantly. Well, if you notice over here, you don't have all these crosses that you have intraday, right? The smaller interval you put, the more the stock's going to go up and down like crazy. As opposed to when you use a longer date range, you'll get a much longer period and then you'll be able to see the much longer trend. So it really depends on what you're looking for. If you're a buy and hold long-term investor like I am in most cases, it's good to look at the longer period, and then if you want to drill down and get a little bit more information, then you start looking at the 5-day chart. So how am I using these indicators and how should you use them? Well, it depends on what your portfolio is like and what you're trying to do. If you're a buy and hold investor and you want to buy long term, it's going to be different than if you want to do day trading, right? But let's assume that you want to be a long term buy and hold investor. You're going to want to look at the longer term trend to see which cycle, which part of the cycle the stock is. So if we look over here, the first thing I'm going to do is I like 1 hour interval over one day. Feel like it's a little bit more precise. And then I'm going to put it either at 1 month, 3 months, 6 months. It really depends on the stock. Like the longer, the better, depending on the age of the stock. If you're looking at SPAC, you won't want 2 years because usually they've only been around for 1 to 3 months. But if you're looking at a stock like Apple, obviously the length that you can look at is a lot different. But let's look at DraftKings. Like the first thing I notice is, look, there's a downward pattern over here. But then if you look closer to MACD and RSI, look on RSI, there was a nice period here where it was oversold, and then it crossed purple line above the orange line and a pretty good like discrepancy between the two, and that was a very nice pop, right? And over here there was a little period of overbought. It crossed, now it went downward. So that's what you're going to be looking for. It's these patterns where they cross, where MACD crosses and where RSI is either like oversold or overbought. That's going to give you some information. But look at where we are right now. Right now, the lines are converging, right? So that means there's probably going to be a cross happening right now. This would be a good time to look at what's going to be happening with this stock. Is this a good time to buy or sell? Well, in my mind, the way I'm attacking this stock right now is it's probably going to go up, right? Because the purple line is crossing above the orange line. But what we can notice is that look at the gap between the high over here and the low, right? But then look at this new high is much lower, right? And this low is higher than this one. What does this tell you? It tells you that there's a convergence in the pattern. So it's probably not going to make either new highs or new lows. It's probably going to go back up a little bit and then pewter out. That's just the way it is. I mean, that's how you kind of interpret it. You have to take RSI and MACD in context of what the big trend tells you. The trend tells us that it's converging. They're getting smaller and smaller, the gaps. So that's what you interpret MACD and RSI to do. Doesn't mean that you can't buy right now, but just don't expect a huge pop, right? But also at the same time, if you bought now, that's kind of good because you know that it's probably not going to be dropping right tomorrow. So if you set your stop loss down here and you're going on an uptrend, then you'll be safe. Like you're not going to be losing 10, 20, 30% of your capital because you bought at the right time using these three indicators. That's how I use it for longer term buy and hold. Now, if you look for intraday, right? I don't think most of you are probably day traders, but if you wanted to look at one day and make profit or average cost down that one specific day, you'd look at the 1 day chart, you'd set it at a different interval, whatever you want. You can do 2 minutes, 5 minutes, it depends. And then you'll look at the same patterns. Look down here, it was very low, very oversold. I mean, you can't really tell with RSI, right? But you can look at it, you can see it from the chart right then and there. And then look at how it crossed over here, started diverging pretty significantly, and you got a pretty nice pop. Then over here, it started having crosses, but notice how the gap between the two lines are very small. That means that their momentum is like neck and neck. It's not one overpowers the other too much. So that's why the price is going to vary, but not excessively, right? And then RSI has been pretty stable the entire day. And look at how the price stabilized throughout the day. So if you noticed over here, this would have been a really good spot to actually open your position. And then if you put a trailing stop loss, or if you put your stop loss like just under it, maybe like 50 cents or $1 under it, depending on your risk tolerance, you would have been doing great, right? You wouldn't have been losing 10, 15, 20% like a lot of us have done before on stocks when we didn't know what we were doing. This is what the power of timing the market is, and buying low and selling high. It's just using very common basic understanding on how charts work. Like you don't need to be an expert. I'm just showing you right now 3 months, If you bought here, you'd be doing well. If you buy here, you're doing well. If you're buying here, you're making a mistake. You get the point, right? It's pretty easy. If you want to short it here, put your stop loss over here, and you can't lose more than 10%, right? Depending on where you put your stop loss. It's really that easy. And now we have the finale. This is what you guys are going to be able to do after watching this video. We have 4 stocks. We're going to look at them for 20-30 seconds. We're going to see exactly what they're doing and if they're a buy or a sell. Here's AMD, right? We can tell it wasn't doing much for a while. It was fairly stable, right? MACD fairly in the middle. Start going up, huge uptick. Now it's going down. It was overbought. Now it's going back down. Does that mean it's not going to go up more? No, but as you can see, the trend is going downward now. So you have more selling pressure than you did when it was just starting to go up. So now it's a little bit more risky. So what would you do? Well, you wouldn't be buying right here. You would be either buying puts or you would be selling it if you have a position. You wouldn't be adding more to your position right now, in my opinion. So I would set a stop loss under here, or if you were shorting it, you could sell a stop loss up here, so you can't lose too much, right? So you have to adapt your position based on what you see in the charts. Number 2, Apple, really amazing stock. As you guys know, there was a huge drop off over here. It was very oversold, and then a huge run. Look at the big volume, big uptick, but what do we see now? There was a huge discrepancy between the two lines. Now it's starting to get much closer together. If you see, RSI was very overbought. Now it's slightly going down. So you can see that the upward movement is slowing down. The momentum is slowing down, meaning that now there's more sellers than there was before. Before the buyers were dominating, now it's not the case. So are you going to be buying right now? Of course not. Now's the time to either sell and take profits or at least limit your position, raise your stop loss, right? So you don't lose all of your gains, or avoid the stock entirely until you know what happens with it. But don't be buying more shares now, in my opinion. Now, Hyliion, Shell, SHLL, huge downtrend as we guys know because a lot of us are involved in it. It went as low as here, like 1798 or something like that. Massively oversold. Crossover on MACD, meaning that it was going on an uptrend again, but look at very, very small discrepancy between the two lines, meaning that there's not a lot of variation in the price, which when you look at it, you can actually, there's very, very little variation. And every time there's a small uptick, it's pushed back down. So until today there was actually a significant uptick. That's pretty cool. But what do we say from this graph? Well, we can see that it's now going upward, but until it reaches this massive support slash resistance, you can't really trust it, right? It's not showing a lot of strength or weakness. So what do we do with this stock? Well, we know that it was oversold at 18-ish, right? So if you see it in the 18 range, it's probably not going to be a terrible range to buy, right? But you want to put your stop loss below that so that you don't take a huge hit. Like you don't want it to go back to 15 or something like that. But right now it looks like it's stabilized and going back up. DKNG, DraftKings, we talked about it a little bit earlier. Massive trend that are converging. Right now, it looks like it's crossing slightly, right? So we can expect a small upward trend. But if you look, RSI is at 42, and it doesn't look like it's really going upward. So there's not a lot of momentum yet, right? So the strength of the movement is going to be fairly small. So you're probably going to see these two lines fairly neck and neck and not really crossing very big discrepancy, right? So this is a very small buy, right? Not too exciting. We're probably not going to see a big movement. Guys, 4 stocks, maybe like, I don't know how long it took, but 2 minutes. I'm sure you guys noticed the same thing as I did. Now you can do that too using these simple tools. I hope you learned a lot. I hope that if you know someone that's bag holding and needs help in understanding when to buy and sell, just share the video with them. Of course, subscribe, and I'll see you guys in the next video. Thank you so much.